morning, everyone. We are going to give it about 2 minutes just to give time for everybody to get into the webinar and everything. Okay, we'll give about 1 more minute, then we'll get started here. All right. Well, good morning, and thank you for participating in today's webinar with us, Credit Repair and How Does It Work, featuring Pinnacle Bank. I am Jenny Tekeski, the Programming and Communications Manager here for the Better Business Bureau Midwest Plains. Just wanted to let everybody know that we are recording today's webinar, and later on today or tomorrow, we will get you a follow-up email with a link to the webinar as well as the presentation information. Our special guest today is Paige Corton from Pinnacle Bank. At Pinnacle Bank, she works as a private banking officer. Paige works closely with the high net worth individuals and their financial circles to assist any personal or commercial banking needs. Her 8-year tenure in consumer banking has given her a solid foundation to not only support her clients, but also to educate and empower her local community on all aspects of banking. Today's webinar, Paige will be talking about the process of credit repair, guiding us through the essential steps needed to correct errors on our credit reports and strategies to enhance creditworthiness. We ask that if you have any questions, so please leave them in the Q&A section, and we will answer all of them at the end of the presentation. So good morning, Paige. Thank you so much for joining us today, and it is all yours.
Sounds great. Thank you for having me. So let me go ahead and share my screen here. Okay. And Jenny, just to confirm, you can see the beginning of the presentation?
Yes.
Perfect. Okay. So as Jenny mentioned, today we are going to discuss some ways that you can navigate to help build or repair your credit. Sometimes, you see that credit score and it's very vague as to how it's calculated, or why one thing would have caused it to increase or decrease and vice versa. So wanted to kind of break down some of the things that the credit bureaus look at and assess when they are calculating your credit score. So as Jenny mentioned, if you do have any questions during this time, go ahead and leave them in the chat and then be happy to answer them at the end. So to begin, your credit score was designed to represent your creditworthiness, or basically how likely you are to repay a lender on time. So this is going to be utilized by your local banks and credit unions, other creditors like purchasing a car from a dealership. Property management companies will also pull your credit if you're looking to move into a new apartment building or things like that, to ensure, how likely are they to pay their monthly rent each month. Even some employers will pull your credit depending on what type of field you're in. They may want to make sure that there aren't any issues, especially if you are in a field that is working with money or different things like that. So today we're going to talk about payment history, number of inquiries, types of accounts that you'll have on your credit report, how long have you had an account open on your credit report, and credit utilization. So the first one we're going to talk about is payment history. So your payment history is one of the best ways to help your credit and making sure that, keeping your payments paid on time for at least the minimum dollar amount. So for example, if you have a credit card that you have $5,000 on, but your minimum payment each month is only $35, if you are not able to, pay off your entire balance by the end of the month, at least making sure that you have that minimum payment made each month will ensure that you are showing the credit bureaus that you are able to make payments on time. So while being able to pay off a balance on a credit card is great, because then you're not accruing interest that you'll then have to pay back. Things happen. We all go into debt at some point, and so making sure that you are making those payments on time will at least make sure that as you are paying off that balance, that your credit score is not being affected in the long run. So some ways that you can go about doing that is, one, budgeting and just ensuring that you are tracking your monthly expenditures to avoid any shortfalls or missing a payment on accident. There's multiple ways that you can budget. Some people are more like pen and paper, and they'd rather just write down, or keep a log of this month I've already paid my utilities, I've paid my credit card, I've paid my rent, and this is how much I have left to spend on anything else. There's also just a great amount of resources out there that you can utilize, whether it be on your phone or on your computer, to help track and keep on top of making your payments on time. If any of you would be interested in receiving some of those resources, I'd be more than happy to share the few that I utilize and share with others. But also making sure that if you are using like an app or something, that you're, one, not paying for it, because there's no need to pay for something to help you budget, because there are plenty of free resources out there for you. But also making sure that it's not asking you guys for your personal information. It shouldn't be asking you for your bank account information or your login information. So make sure that you are watching for that stuff, for potential fraud situations. Something else that I would recommend is to just automate your payments. So set it and forget it. Going back to my first example of having a credit card payment of $35 a month minimum, set it up so that at least each month that automatic payment is pulling that minimum balance for you, so then you don't have to worry about getting any sort of late payments, and on top of that, late payment fees. If you can afford to make more than just the minimum balance payment each month, set it for that. And then that way, you don't have to worry about logging in each month or calling in or doing this or that to make sure that it's paid on time. In the back of your mind that if you get too busy, or, you don't have enough to make a larger payment that month, at least you know that minimum balance payment is coming through each time, and you're staying on top and protecting your credit score in the long run. Lastly, have an open line of communication with your creditors. If you are having trouble making your payments on time, or you're in just a rough patch where that after these few months, you'll be back at making your payments on time, go ahead and speak with your creditor and see if there's anything else that they can do to help you before it affects your credit score. As somebody that's been in banking for 8 years now, it's never fun to have those conversations with your banker or letting somebody know that you are having trouble, but we're here to help you. And so if you're just having trouble, this month, but you know that you'll be able to get it back up and running the next month, we're more than happy to just set the system up to push that payment to the next month for you. That way, one, it's not affecting your credit score. Two, you're not getting hit with late fees and late payments. We understand things happen, and I think everybody out there is pretty open to assisting you in those situations if you're willing to have those conversations with them. So just make sure that, letting them know before it is becoming an issue, so then they can help get you set it up and get you on the right path for success in the long run. And, as I mentioned below, consistent on time payments is better for building credit than paying off loans. So, if you are only able to make those minimum payments or smaller amounts, that's going to show that you have a longevity of payment history than just paying it off right away and maybe, stressing your bank accounts a little too much. So, utilizing these 3 steps can really make sure that you're setting yourself up for not only helping you pay down debt and balances, but also help building your credit as well. So next one we're going to talk about is number of inquiries. So an inquiry is when you have requested for your credit to be reviewed by a lender or a creditor in order to apply for a loan or other requests, like I mentioned before, getting a job or getting a new apartment, things like that. So there's 2 different types of inquiries, and you may have heard of these before. A hard inquiry is a formal credit request. So this is you're reaching out to your bank or you're reaching out to your property manager to get a new apartment. They're going to pull your credit, which will show up on your credit report.
Okay.
So, yes.
Sorry, the screen's not changing. It's still on the first slide.
Oh, okay. Let me see. Are you able to see just the PowerPoint system right now?
Yes, it's on the number of inquiries now.
It is on that now? Okay, let me see if I can get it. Okay, how about now? Are you seeing the full slide?
No, if you go to the display settings, it might be able to switch then for you. It has your next slides as well showing.
Oh, okay. There we go.
There we go. Perfect.
Okay, now you're seeing the updated slide?
Yes.
Okay, I'm gonna go ahead and just move one forward double check that it's working. So are you able to see types of accounts now?
Yes.
Perfect. Okay, thank you for letting me know.
Yeah.
Okay, so, oops. So as I mentioned, a hard inquiry is something that is going to show on your credit report. So if I were to pull your credit, there will be a list of how many times you have reached out to other creditors to pull your credit within the last 12 months. So if you have been hopping around from bank to bank, maybe looking for a deal for a car loan or things like that, I'll be able to see that you've gone to bank A, bank B, and bank C all within a short period of time or however long it's been. That is something that we will look at as we are working on your application, and they may look at it in an adverse way as why are they going to all these different banks, and is there an issue that maybe we haven't seen yet but maybe these other banks are seeing, so they're going around to other banks. So if you have gone to a dealership and they say, we'll go ahead and finance the loan for you, what they do is they tell 6 banks that they need to pull your credit so they can see what's the best score that they can get, what's the best interest rate. But then all of those inquiries are going to be notated on your credit score. So then if you go to apply for something else in the future, like let's say a mortgage, your mortgage lender may ask you, why do we have 7 inquiries on here all during the same period of time? So just be prepared for that. It doesn't necessarily affect your credit score heavily, but it is something that they do take into account, and if you have multiple inquiries, it may be something that could negatively affect your credit score. Soft inquiry is a non-formal credit request. So this is something that you have not asked for necessarily, but let's say, for example, you guys get those letters in the mail from all the different credit card companies saying that you've been pre-approved for a credit card. That's a soft inquiry because they have checked your credit to an extent to at least see maybe your credit score, and they then base that decision off of that limited information that they're able to pull, and then get you pre-approved for a credit card or things like that. Another one is if you do have existing loans with banks and maybe there is an issue that arises, they are authorized to be able to pull your credit again just to check to see if there's anything that's changed since the loan has since been originated. So those are different types of soft inquiries. Those do not affect your credit score and they do not show as an inquiry on your credit report. So the next one we're going to talk about are your different types of accounts. So there's different types of accounts that you will apply for or get at some point, and then they all show on your credit report. And depending on how many you have of each one could affect how your credit score is being calculated. So just like with investments, diversifying the types of accounts that you have on your credit report could help or hurt your credit score. So, most people will have a mortgage, a car loan, maybe student loans, and then credit cards or other revolving debt. Having multiple types of debt on your credit report outside of just credit cards could help offset having those credit cards and unsecured debt on your account, which could negatively affect the score. So, for example, if you have too many credit cards or revolving debt, which means that you get a balance and then you may utilize 20,000 of it and then you pay it back down. That then means you then have 20,000 to utilize again. That's what a revolving type of debt is, like a credit card. Being able to show that you have like a mortgage or a car loan or another loan that you are making monthly payments to each month helps show the credit bureaus that you are making your payments on time. You're not racking up more debt by utilizing only credit cards and different types of revolving debt. So those are some things that could help your score. If you only have a credit card, and you don't need any more debt, I'm not recommending that you go out and get more debt just to help with your credit score, but make sure, and it is something that we will talk about here shortly, make sure that you are utilizing it minimally. So you're not going and maxing out multiple credit cards and you don't have a long list of credit cards that are open and active, because that does show a cause for concern with some of the credit bureaus. Because if you have all of these credit cards that are open and available to you, that means that if you really needed to, you could rack up, thousands and thousands of dollars of debt all at once, which could make it harder for you to make your monthly payments and pay it down. So if you do have, a car loan on your account, keeping it open and making your monthly payments each month will show a little bit more history on the account than if you were to just have a credit card or a revolving debt that you're maxing out and then paying off here and there. And then let's see here. So the age of open accounts is also something that is actually looked at fairly heavily with your credit score. This is going to be utilized to show your strength of repayment on your credit history. So what they look like is what they will look at is the average age of your accounts, the age of your oldest accounts, and then how long has it been since you last opened up an account. So for example, if you're starting out and you're, 18, 20 years old, you may only have potentially a credit card, maybe some student loans on your credit score that you can show for history. So you might not be able to really heavily weigh your calculation off of that for your overall credit score. But if you've had a credit card on your account for 20 years and you've shown that you've been able to utilize it and pay it down to zero, and not max it out, then that's going to help show, you've got a long line of repayment history that is positive and can show other creditors and the credit bureaus that, you are able to responsibly utilize these and get them paid off or at least use them responsibly. Something else that excuse me, is really helpful is having a mortgage or a car loan like we discussed, and having that diversified account list on your credit report. That will show, I have a mortgage, I'm making it on time every month. There have been no late payments. So some of those loans that are a longer term can really help your credit score because you're able to show a long line of history with that. If you do have a credit card or a loan that does have a low interest rate or something that you feel comfortable making payments on monthly, then I would recommend trying not to close those out, because when you close them out, it takes away that repayment history that you've had with it for all this time. The best one to utilize is a credit card for this example. If you have had a credit card, for 10 years and you can leave it at zero and it's not charging you annual fees just to keep it open or anything like that, keep that open. One, you can use it sparingly to show that you can still pay it off each month, but you can also show that over the course of the 10 years, you've been able to keep that account in a positive manner. You've never had any late payments. And so then when somebody like a banker or another creditor is reviewing your credit report, they can say, wow, look at this. They've had this credit card for over 10 years. They have utilized it some, but they've always paid it off on time. They've never had any late payments on it. So that's really going to benefit you in the long run in multiple aspects, not just with calculating your credit score, but also with future credit requests in the long run. Okay, and then lastly, credit utilization. This is the one that has been like the most recent hot topic on how to help with your credit score. For the longest time, people have really tried to figure out, what can I do to help keep my credit score, growing, or, how are they calculating this? And it has been a mystery for a really long time, but we have figured out that credit utilization is something that they are weighing very heavily on when coming to that final number for you. And what credit utilization is the percentage of available credit that you're utilizing on your credit cards or other open-ended lines of credit compared to your maximum limits. So for example, and I like this picture at the bottom to help. let's say you have a credit card and the limit on the credit card is $10,000. You utilize it up to $5,000. So right now you have a balance of 5,000 on there. That means that your credit utilization of that card is 50%. So you have used half of your available credit on that card right now. So something that the credit bureaus are looking at is, are they maxing out their credit cards? It's not a bad thing to max out your credit card if you're paying it off, but if you have multiple cards that are maxed out, that does show a cause for concern that maybe there's an issue where you're not able to either pay these off in a timely manner, or that you're using credit because you can't afford to pay for things normally. So the best way that the credit bureaus have recommended to utilize your credit cards is to keep your utilization rates as low as possible. Um, Based off of what we have found, they recommend that you keep your utilization at either less than or equal to 30% of your available credit. If you're able to, say, only keep it at 10-20% utilization, and then continue to make your on-time monthly payments and show that you are paying it down, then that's going to help build your credit and show that, I am responsibly using these credit cards and getting them paid off on time. Whereas if you are exceeding 30%, that's where they may start asking questions, and the formula that the credit bureaus are utilizing may start negatively affecting your overall credit score. As I mentioned before, that it may be cause for concern that uh, you're utilizing it because you can't afford to pay something off regularly, and so you're having to use credit for that. So something that you can do is look at your credit report, create a spreadsheet, or write down, here are my open credit cards. What are the available limits on all of these? And then that way you can kind of keep in the back of your mind, this one only has a credit available balance of $5,000. And right now I'm using $4,000 of that. So can I get that paid down a little bit more so that I'm only using 10 to 20% of it? And then just, you can continue to make either your minimum balance payments, or making a payment that right now makes sense for you, but keeping that utilization credit balance lower, so then it's helping build your credit that way, and you're showing that you're not maxing out your cards or anything like that. I would definitely recommend looking at your credit report and taking the information that we've talked about today and just checking off, like, am I doing this, or what does my credit report look like right now? Maybe I can diversify it a little bit more. Or if you do have a credit card that you've had a lot of late payments on, but you're working on getting it corrected, get those ones that are potentially negatively affecting your score the most, and get those ones closed out. But if you have a few credit cards that you've always made your payments on time, you're really working on getting that utilization rate down, keep those ones on so that you can show future creditors and show the credit bureaus in the future that you are responsibly using all of your debt, and doing it in a way that is going to not only benefit you in the long run, but also making sure that when they are calculating your credit score, that you are getting the most out of it at that time. So that is all I have right now. I know that that was a lot of information, so happy to answer any questions that may have popped up. And as Jenny mentioned, we'll be sharing this information, so you can always go back and and like I said, check off the things that you are currently doing or that you would like to start doing. And if there's anything that I can do to help walk you through that process, I'd be more than happy to do that for you guys as well. So, Jenny, I know you have a couple things that you wanted to talk about, and then
Yep,
we
can
go from
you
there.
actually jump back to the number of inquiries slide? We have somebody who would like to take a snapshot of that.
Yeah.
Thank you. And then the first question is, if you have several credit cards, is it good to consolidate them all down to just like one payment? Or should you continue paying each one the minimum payment monthly?
Yeah, so it's going to depend on the situation. Um, Definitely, as of today, we all know that credit card interest rates are astronomically high. So if it would make it easier for you to consolidate all of your credit cards and put that balance on one payment that makes it easier for you to make and stay on top of, and also potentially get a lower interest rate on that, then I would highly recommend doing that first. You can continue to build your credit in the multiple ways that we've discussed today, but the biggest thing is making sure that you are not paying, thousands of dollars in interest just to try and get out from under a lot of credit card debt. So if if that's the biggest thing for you as you're trying to build and repair your credit, is just trying to get your balances, to a manageable amount, then looking at debt consolidation options would definitely be what I would recommend most. And then getting those cards that have been an issue closed out. So then if you do have trouble using cards and maxing them out, then you're not tempted to do so in the future.
This looks like it's a two-part question. If you close a credit card, it doesn't drop off your report right away, does it?
Correct. It does show when a creditor pulls your credit report, it shows all your open active accounts at that time, and then after that, it shows all your closed ones. And your closed ones will show on there for, I believe, 7 years. So it is on there for a long time. But if you had a card that is negatively affecting you one way or another, then showing that you've closed that out is kind of your way of showing that I'm working on getting these corrected, and so I'm closing them out so that I'm not tempted to use them, and they can't continue to charge me anything on those as well. So they do still show on your credit score or your credit report, but the bureaus do not take those into account as they're calculating your score, as they do so.
Next question, what specifically would employers need or be looking for if they check your credit score and report?
So some things that they may be looking for are: do you have a lot of late payments on your credit cards or other loans? Do you have any bankruptcies? Do you have any judgments? Because all of those things will be reported on your credit report. So especially if you are in a sector that is heavily into finances or things like that, they may want to ensure that you are appropriately using your personal debt, so then there aren't any issues in the future, especially if you are in charge of other people's monies as well.
Uh, when using like credit counseling platforms like credit advisors here in the Omaha area, um, do you have to pay them a specific or percentage fee as well? Or is it just strictly consolidating your credit cards down and just paying that direct amount each month in fee?
So I think it definitely depends on which advisor you work with. They probably have a fee schedule that they utilize. So I would definitely say that if you're going to use a credit advisor, make sure that you are researching what the fees look like. How is it going to be structured? Are they there to just help you get everything kind of consolidated or corrected for you? Or are they going to be charging you per meeting? How is that going to work? Um, I think it's going to vary based on who you speak with. So make sure that you are doing your research when you do that. Another option for you as well is to speak with your local bank and ask them if they have any resources for you or would be willing to look at potentially consolidating your debt for you that way. I have never met a banker that would turn down assisting somebody as they're trying to rebuild their credit. So definitely look at your free resources as well. Also, speaking with the Better Business Bureau and connecting with their resources is definitely the first step that I would take before you look at paying somebody to help you with that.
And can you go back to like the first couple of slides that were not showing up?
Yeah. Um, so here's the first one. So the credit score.
Yes, that one.
And then this is just a breakdown of the different uh, pieces that we discussed today. And then here was the payment history one. And I believe this is kind of where it froze.
Yes. And again, we will send a follow-up email out with the presentation and the webinar link. So you'll have all of this information too. But then that way, if anybody else needed to take snapshots, they can definitely do so. Okay. I do not see any other questions. So with that, I just wanted to let everyone know just to remind you, please check out the BBB's website. It's bbbinc.org for all of our upcoming and future events. These are just a few that we have coming up in the next couple of weeks. May 23rd, we have Leading Boldly, Transforming Anxiety into Power. May 30th is Building Credit and Understanding Your Credit Report and Score, and that's actually with Union Bank and Trust. June 3rd is Securing Tomorrow, Mastering Companies' Retirement and Benefit Options. And then June 4th, we have the Alzheimer's Association, and they will be actually presenting on Alzheimer's and brain awareness, tips for healthy living. And then June 25th, we have Protecting Your Business and Customers from Scams. And that's actually going to be presented by the Federal Trade Commission. And then we just like to let everybody know, September 24th, it will be our 27th annual Torch of Awards Ethics Luncheon. We just announced the winners for Torch Awards, our Spark Awards, and our Student of Integrity Scholarship winners a couple of weeks ago. So this is a time for us to celebrate all of those winners this year. So please go to our website, check that information out as well. If you'd like to join us, we'd love to have you out there. It is at ABU West Shores out in Waterloo, Nebraska. Again, I am Jenny Takaski, the Programming and Communications Manager here. If you have any ideas or programs that you would like to see the Bureau put on, please reach out to me. I would love to discuss those opportunities with you. Paige and I are in the process right now of coming up with another program in July, and it's in regards to students going away to college for the first time and ways that we can help them in regards to not being scammed or actually helping to protect themselves and their identity as well too. So that will be in July. So please, again, check out our website for that. We thank all of you for joining us today. We ask that you fill out our quick survey that we have. You can scan the QR code and give us your feedback. We're always striving to do better, so please let us know what we can do for that. And again, a special thank you to you, Paige, for coming out and discussing all this information with us. I know I always learn something new every time I do these different webinars, so thank you for that. And again, we will get all of this out to you later on today. Everyone have a good day. Be safe out there.